The first half of a given month is available at the end of the month, and the second half of a given month is available at the 15th of the next month. We are still yet to receive AMC. First half of October failed to deliver data. This is not the first time that they are late, but I believe this is the longest extension that we have waited. If you're new today, we have a lot of stuff to cover with AMC, especially what's happening with the DEC hedge funds, GameStop, the S&P 500. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. So AMC sitting at $10.50, down 4.11% on the day, got a nasty red candle. It came all the way up to the Bollinger Bands, tested it 2 times before getting this hard rejection, which is usually what happens when any stock hits the Bollinger Bands. I'm going to tell you the reality of what's happening. So we have been tracking AMC. It came up, broke the 1075 level that we have tracked based off of it for an entire day. VOLU decreased on that breakout, which I didn't really like. And now we broke back in, and we based off of previous support right around $10.35. I'm happy that we based off previous support. I'm unhappy that we broke back below 1075. However, we may just need a cool off for the Bollinger Bands. Taking a look at what we're tracking back here, it came up, got this job trading against the trend line. AMC came up, got this job trending against the trend line. Broke out, got this scale down. Same thing as right here, scale down, and then we broke out once again. And then this would have been the nasty breakout, or at least we are sitting in the nasty breakout and it looks like they are keeping it down from happening. We are in this point of interest, okay? We're not waiting for the point of interest. We didn't pass the point of interest. We are in it. We're sitting in it. We should have seen that major rip. What are they doing? What's happening? First, we aren't seeing. They failed to deliver data. And I would say this is all invalidated, that we are getting this breakout based off of the technicals. It's not looking good. The volume isn't high enough. They're dumping short exempts on it. If there wasn't a catalyst tomorrow, this is the only thing propping up the theory still that AMC can run. AMC is about to report Q3 earnings tomorrow, November 8th, after the market closed, 5 p.m. Eastern Standard. So an hour after close in the last reported quarter, the company's earnings and revenues topped the Zacks consensus estimate by 104.5% respectively. Also, the bottom and the top lines grew year over year. AMC Entertainment earnings remarkably topped the consensus mark in the last 4 quarters, the average surprise being 44.2% in average, which is absolutely nasty. AMC also had an order in balance, yesterday 133,000 shares, 2.5 million shares available to borrow on AMC, 11,000 calls, compared to 8,000 puts expiring in the money currently, with 73,000 calls expiring out of the money. So if we do start to scale up on earnings, and we have a nasty earnings tomorrow, this could be good. Or the gamma to build up the option chain is looking a little bit spicy. Short exempts still extremely high, 238,000, then 216. As soon as the volume starts to scale up, they dump short exempts on it. Stay tuned, because we're about to touch on what's happening with the DEC and why it may not be looking too good for hedge funds. But cable news is dying fast, especially CNN, which is kind of ironic, right? These cable channels that are bashing AMC that clearly have a given narrative. And speaking of having a given narrative and these channels dying, be really financial. Down over 22% on pace for largest percent decrease since May of 2014, they are down 83.6% from their all-time high. Karma's DEC doubles the margin requirements for the mortgage-backed securities. Also mortgage-backed securities VAR testing, plus 50%. Banks will have 2 weeks to prepare right when the U.S. government will be shut down. To me, this is clear. The DEC sees something coming. Dated November 6th, effective November 20th, Fixed Income Clearing Corporation will be changing the following VAR model parameters of the mortgage-backed securities division. Long Good and Red FIC is making continued preparations to insulate itself from a market shock event and/or continued volatility from the likes of over-leveraged hedge funds betting against the Treasury market. That may lead to its member participants defaulting in quotes. Bond investors and rates traders are increasingly betting interest rate cuts will start by the summer, challenging policymakers' mantra of high borrowing costs for the foreseeable future. Markets are now wagering that the Federal Reserve will cut rates for the first time in June and will have enacted almost 100 basis points of reductions by the end of 2024. The Treasury market take an unexpected turn for hedge funds. At least 600 may unwind very quickly and leave some people up a creek with no paddle. What means squeezy? Well, potentially, if these hedge funds do end up getting margin called, and the debt expects that to happen, protecting themselves from a market shock from these over-leveraged hedge funds, this could cause high levels of volatility and squeezes to happen. And in a couple words, bankrupt hedge funds, plus hedge funds and private equity firms escalated their battle, with the Securities Exchange Commission asserting that the regulator lacked the authority to enforce a set of new restrictions in August. Hedge funds are trying to tell the SEC that they don't have the authority to enforce restrictions on these hedge funds, which is just hilarious. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.